money, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this is the chart of the Russell. This is the one that we shorted back here. Of course, here on, you can see right there it was on January the 3rd, and that was right at the 382 ABCD pattern right here, right out of Gartley's book. We've had a pretty big break here between Friday and today. We'll look at it today's action because we did not take out Friday's low. I don't believe. Let's just double check. Well, it says we did, so I stand corrected because that Sunday and Friday's low was right back there, so it did take it out by quite a bit. And now we're actually having an ABCD right here in the old Russell as we speak. It's quite a ways from the 382, but let's just go back to the one that we had here on Friday and see what that will come to. There's our ABCD, and the 382 would come in here. It looks a little, 382 is up here quite a bit. Well, it's not too far away. Just another 15 points. That would be the 382 coming in right there on the Russell. Anyway, it looks like it still has some more to go to the downside, but, we're just doing one day at a time. What I thought I would do, since most of you folks don't get the 24/7 updates that I send out each morning, go over some of the things that we were talking about last night. Fell back to actually early in this morning, like at 4 o'clock our time, and then we'll take a look at them. First of all, we were talking about gold and silver being bearish, and as you can see here, where we were here on Thursday, there was the action that we had. There was the action on Friday. Here's today's action. You can see we're down well over $1.50 in the silver market. We're also having a pretty big correction here in the gold market. And as you come up here and take a look at this, we'll get this up here on the hourly so you can see where we are. There's where we had the big move right up in here. Now we've come down to the 50% retracement of this move right here. But if you looked at this when you were expecting a market to be lower like we were, I just want to bring this up and just show you because it was rather interesting, because there was the high last night, from Friday, and then here was Sunday's action. And Sunday's action, of course, following the premise that you think the top is made, you just look for the first 382 ABCD pattern, and there it was right there. It was actually 50%. It was $2 off, and then it came down, and you have another 382. We'll just draw that in so you can see it. Well, you had two 382. This thing is just too sensitive. But you had from your high down to your low here, the rally back. Beautiful ABCD again. You can see it right there. And if you take a look at that, this is really a day trader's dream when you watch these on a shorter time frame. But most people aren't just there. Again, it was just a tad off of the exact 382. Same thing on this one, just a tad off of the 382, and we're continuing to go down as we speak here today. Now, one of the things that we need to talk about, and we will shortly, is the foreign currency markets, because that's where we thought the real action was going to be. And of course, it is to some extent. So what we're going to do now is we're going to come up here and we're going to take a look at these. I've got them cascaded here so we'll be able to see them without too much trouble. The first one we're going to look at here is the euro on the weekly basis. We're going to get this up here, and you'll see here's where we are right now. We went below the 382 on the weekly by just a little bit, okay? Now it's bounced back above it. So that's actually a good sign that maybe the U.S. dollar is possibly topping, and we'll look at that just as soon as I finish this. But going below that is a bad sign. So looking at it on a short-term basis, from last night, you can see there's where we went below it, and then since that time we backed up. 102 is the key. So once we packed up above it, we were just making little retracements. That it is. There's nothing to get excited about. These are just small ABCDs. We did break it, so that's an important spot. All right, so the next thing we're going to do is we're going to take a look at the British pound. That was the other one. We took a loss in the British pound. We'll get this up here, and you'll be able to see where we were. You remember we had a perfect setup here on this day right here at 22,580, and you can see it took our $300 faster than the jackrabbit could run away from the turtle. I don't know where I came up with that one, but it sounds about right. Anyway, this is a big move down here, folks. So we've reversed a little bit, 50 pips, which is really nothing. So there's nothing really going on here with the British pound this morning. If we look at it in terms of the dollar index, which you want to do if you're following these currencies, if you get the dollar index, and we'll look at this up here on an hourly basis, because we did make a slightly higher high by just a little bit. There was a high from Friday. You can see went a little bit higher. And we're back below the 1.618 number. So there's a chance here that this could be reversing, and that'll be an important part of whether these markets can have legs to have some type of a pretty good rally coming in on these markets right now as we speak. Now, we do have one position. You might be able to help us out here today. We do have one position that's not working, and that is the corn. We sold corn here. This is the ABCD on the corn. Now, this is the daily, folks. Now, we sold it here at 472. We got to stop at 482. It's trading 3 cents against us right now. But if you look at this on a really long term, folks, all that's doing is making a 382 retracement from the June high right back in here. We took out this high by just a little bit, so I think the risk on it is acceptable. But right now, it's just not working. But the stop is in because we don't know which ones work and which ones don't. That is the key. Now, let's move over and talk just a tiny bit here about the Treasury bonds. Here's the Treasury bonds as we get these up to date here. We did make another new low in Treasury bonds by just a little bit, had a little tiny bit of a rally. Folks, to me, this is one bearish pattern. I know we haven't totally collapsed yet, but my goodness, there's no rally here at all. And the news should be such that it should be rallying. We had tremendously bullish news on Friday, and the market just spit it back in the face of the traders. And that was rather unusual. It says we're going to come down at least here to this 108 level, down another two bars down into here, another two handles, down into this level right here. So interest rates appear to be going that way, and that's what we want to be watching. So I hope that's hope is a good trading word, but it's also a good way to think of things in life, have hope. Boy, those folks in California, boy, they need hope. When I saw what was going over there on the news, I was really, wow, that looked like Hiroshima. And folks, that is one exclusive area. I drove that area every single day, even when I was living in Westlake Village, which is right over the hill from Malibu. But all of those homes in Malibu along the coast, all the way almost to Oxnard, were all burned. My friend that is in the car business told me that there were more than 100 Ferraris that were destroyed in that area. That's well, there's a lot of wealth there, but that's neither here nor there. Neil Diamond's home was also destroyed, along with Mel Gibson and Tom Hanks and a whole bunch of other people. But boy, it's really, really sad to see what's going on. So we're going to take a little break here, and we'll be right back. So stay tuned.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, I posted the chart of the E-mini S&P to show you the action from Friday to where we are right now. We didn't make the ABCD as of yet. We could certainly, but 57.95. We got as low as 58.10. That's held, and as you can see, for the last 8 or 9 hours, we've been going sideways. I believe we're searching for the 382 of the range on Friday, which was the high right before the report. That comes in at 58.65. That to me would complete an ABCD that I've already posted here. I'll do it again just for you folks. This is what I do when I'm watching short-term trading, and I'm not looking to trade every 5 minutes, folks. I'm looking for 2 or 3 good trades a day, but this would be one that would be right in the ballpark of what I'd be watching, especially if we got here to that 58.65 level, because then I can put my stop right above here, and I know where I stand as far as stops. Folks, I have, as you know, I've been bearish for quite some time, but I've never been this bearish. I'm not. It has nothing to do with the fire. Well, I'm sure it does, but I don't factor that in because I don't know anything about it. But when I see it, it just literally scares me. If you read anything about Jesse Livermore, in 1906, they had the big earthquake in San Francisco, but it took 4.5 weeks for the information from San Francisco, how bad it was before the market broke. And when it finally reached New York, it caused a tremendous downdraft in stocks that lasted for 3 or 4 years just because of the fact that San Francisco was pretty much decimated. I don't even think you can call Pacific Palisades and Malibu decimated. I mean, it's more than decimated. I mean, there's nothing there. I mean, that's just, it's just sad. 26 people so far, and I'm sure there's going to be more. But anyway, the picture does look bearish. Just looking at this, of course, on the daily, we're seeing the same thing. The 382 on this move is 57.65. Remember, that's really close to that 57.95 that we're looking for. So that's going to be an important number here coming in here either today or tomorrow, sometimes this week, is if we get to 57.65 and hold, we could get a little bit of a bounce. But as you see, if we start getting below here, then it's going to be really, really difficult to keep this market up. If we look at this on just a real short-term basis here over the last month, if you take the low that we made right back here around November the 4th, must have been election, and as you can see that the low today came in at the 786. which was 58.17, and the low was 58.09, and it stopped right there, right on the 786. So that completes an ABCD. And also, if you look at it real closely, you can see that it also completes a 3-drive pattern right there, and you'll be able to see what it looks like. There's your drive 1, drive 2, drive 3. So we should be in the midst of a rally. Now, how much of a rally we're going to do? Well, I originally said we could easily do 382 off of this. Well, that comes in at 58.65. Now let's go back, play the devil's advocate, because this has taken quite a few hours. Let's just look at this. Remember, this one here just took 1-2 hours. Boom. All right. This one's taken a lot more time because there's more selling coming into the market. So 58.65 is really key, because if we just completed the ABCD right there, but if we get above that 58.65, that means we've got a little bit more action to go before this thing finally rolls over. But the overall picture of all the things that I saw, and I looked at everything over the weekend in the newsletter, starting with, I'll just do a couple here to show you. Look at the emerging market move for folks. Now, just to prove how much fun it should be is to go into the newsletter, and I want you to look at the Hong Kong stock market. I want you to look at the Chinese stock market. I want you to look at the London stock market. I want you to look at the Indian stock market, and you're going to see they all look the same. So regardless of what's happened with this fire, it doesn't look good. Now, let's just get out of a realm that I know nothing about, and that is Bitcoin. Now, here's Bitcoin. Now, I'm using TradingView to give you this because I don't do any trading in this, but you can see the head and shoulders pattern. There's your left shoulder. There's your head, 10,890. There's your right shoulder coming in exactly at the 61% retracement at 103. Then it stops right at the exact 382, makes a higher high here by 50 points, and has already dropped 5,000 points today. We've taken out this. It's a bad sign, folks. This means that, this thing's making a pretty big top up in here. So it's a $3 trillion market. So if something would happen to that, along with all the other stuff that we're looking at, things could get a little dicey. Well, I think dicey is the understatement of the year, because dicey is here to stay. That's my opinion, and I'm sticking to it. I've done a lot of work over the years here. This is the market from 1929. I believe we're right in here somewhere. That's my guess. This might be the day here where we have a little day or two rally. It's 382 off of the high, and then boom, boom, boom. And this was 382, folks, before anybody even knew what 382 was all about. There was your 618. There was your 382. There was your 382. There was your 382 off of the whole thing. But this thing rallied into October the 1st. Let's try it again, Larry. April 1st of 1930, and then from 1930, April, it went down 90%. To bottom on July the 8th, 1932, at the price of 42. The high was 383. 97% of its value was lost during a time when there was the greatest inventions we've ever had: automobile, air travel, refrigeration, electricity, indoor toilets, radio, television, just one after another. And yet, look what happened during those 2 years. It came down. The greatest buying opportunity in the history of the world, because the Dow bottomed at 42, and so far it's topped at 45,000, up 1,000 times in 92 years, folks. All you had to do is buy stocks and hold on. However, if you bought some stocks like Polaroid, Kodak, and some of the others, computer sciences, they didn't do so well. So you just have to pick the right stocks and stick with them, and you'll end up making a couple of bucks. All right, now let's get back here and take a look at a few more things that we want to watch. And get here one out of the way here. And I want to bring to your attention the Australian dollar, because Mr. Bartolioni sent me a news, says he's got that on his watch list for a potential buy. So we're going to take a look to see what Bart's looking at. We'll get up here at the daily, and we're going to get up we'll hopefully have Bart as a guest here on Friday. But here's the Australian dollar. We're actually up a tiny bit today. I don't see anything here on the daily. Made new lows. Let's look at the long-term weekly and see what we have here. Oh, we've got something here in the weekly, because it looks like to me that we've still got a little bit more to go. That would take us down here to this one, about another 200 pips would get us to where we want to be. We're a tiny bit higher today, but that's what my guess is we're going to get to this level right here. It's a sophisticated guess, but it's still a guess. That's really what it's all about. Okay, now I had one other question for somebody, and that was about Tesla. Let's get this up. And folks, the stuff that you hear in the news about what's going on with all the politics and this, I urge you to just let it go through one ear and out the other, because, I mean, none of those guys tell the truth. I mean, it's just, even if they think it's the truth, it's not the truth. So here's Tesla, and it is up on the day. How can you get a stock that's up on the day when most of it's getting killed? It's acting pretty nicely. You can see here we matched the low of yesterday. It's having a little bit of a bounce, so 396, nothing really exciting happening with that. So still looks okay. And then the last chart we'll look at, of course, will be Apple. Then we'll have our friend Norm Winsky on, and Norm will be talking to us about what he's looking at. And we'll come up here and be right back. And here's a picture of Apple.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, and I believe we have Norm Winsky on the line, and I think he's in the house. Norman, how are you, my friend?
Great, Larry. Hello, Larry. Thanks for having me on.
We're ready to go. Fire away. Tell us what you're looking at,
well,
Norm.
Usually I would, when I've been on your show before, I usually review what I forecasted when I was on the show previously. However, I haven't been on your show now for, I think it's been about 6 weeks. It wouldn't be practical to go over the last 6 weeks. So I'm going to invite the folks. I do these videos every 2 weeks. They're on YouTube. So if you'd like to see what I forecasted over the last 6 weeks, for every couple of weeks or so, and what the results are, I had one where I hit over 85% winning signals. So if you'd like to see how I did that, what cycles we're looking at, contact me. I'll be happy to provide you with those video links. Now, instead of doing that, I have a special feature here for you. Every year I do fractal forecasts. I look at the price action of January for about 28 different markets, and then sometimes it's really great, as you will see in a minute. It almost sometimes it's like if you're an old dinosaur like Larry and I, you might remember Fred Astaire and Ginger Rogers. I say the forecast bars and the actual prices are dancing like Fred and Ginger. You know, they were a top dancing team in the 30s and 40s musicals. You know. All right, here's the thing here. This is based on January's price action. I published the forecast in February, and then at the end of the year, I overlay the actual prices. Here's crude oil. Now, sometimes these fractals do invert their mirror image of what you're actually seeing. So I flip it upside down, and here's crude oil. You can see these are the blue bars I forecasted back in February for the year. And you can see the black bars are like Fred and Ginger. They're dancing very nicely together there. Here's the NASDAQ. The blue bars were the forecast, and the black bars were the actual prices overlaid at the end of the year. So it's pretty amazing. And I'm offering you can get the 28 market results for free. And if like, you can get a free 10-minute class. I'll tell you the simple secret to how I do this. Yeah, I could teach a 10-year-old to do this in 10 minutes. So you don't even have to buy anything. Yeah, I tell you the big secret. You can do it yourself, and it's pretty interesting. All right, moving ahead here now. Here's what's coming up. Tonight, this evening, I think it's about 5 or 6 o'clock Eastern time, we're going to have a full moon in the sign of Cancer. Anytime we have a full moon, new moon. Larry, you were mentioning on my list here, the usual suspects is financials, which stocks, bonds, and you were earlier talking about currencies. And if you watched me here, listened to me on the show here a few times, you may have noticed that a high percentage of time, many markets turn on full moons and new moons, and we have a full moon tonight. And what we're looking for is a market that is on extreme. For the stock market, I had some big cycles happening over this past weekend. So there's a possibility of a one-day reversal where you get a rally into today's close. If that happens, then I'll be looking for a high tomorrow. If we continue lower into today's close, then we probably are making a low tomorrow. So tomorrow will be a key pivot day, reversal day. So financials, grains, precious metals, soybeans, oil, and silver. After the close of tonight, be into tomorrow's opening or early first hour would be the ideal window. Then the next event we have is the afternoon of the 16th. That's Thursday, and we have Venus and 0 markets that are connected to Venus: cattle, copper, cotton, sugar, wheat. So, well, again, for one of these markets or one or more of these markets to be at an extreme, if it's going sideways, forget about it, right? So you want a market that's been going up, 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 or down, down, down. The bigger, it's the Newton's law for every action. There's an opposite equal reaction. So obviously, the bigger the move has been, the better, the higher probability and the better reversal you might get. Then the night of the weekend, I think that's the weekend. The weekend of the 17th, which by the way is a 3-day weekend, because the markets will be closed on the 20th. We have Mercury aphelion. We had last time I had this back in, I think it was October. Gold made a nice short-term top there, pulled back, and then it went up. And October 30th has been the high for gold, and that was then right after Mercury aphelion. A few days later, we had Venus aphelion, and that has been the high for gold now for the last couple months, and that was a new all-time high. So anyway, we'll be looking at corn, gold, soybeans, and wheat for Mercury aphelion. And then the night of the 23rd, that's a Thursday night, Pluto aphelion, by the way, that's Mercury farthest from the sun. And then we have Pluto apogee, that means G means Earth. Pluto will be its yearly cycle farthest point from Earth, and we'll be looking for cocoa, copper, hogs, and T-bonds. And then the night of also we have a double whammy here. That same night, the 23rd, night of the 23rd, heliocentric, that's from the point of view of the sun. Mars will enter the sign Leo, and that's corn and gold. So this is the market system. A great thing about this system, tells you when to look and where to look. And if the market conditions are right, then you have a high probability for a good trade. If the conditions are not right, forget about it. All right, just take a pass. All right, so if you haven't seen me before, I've been doing this I think May of this year. It'll be 50 years since I stepped on the Chicago Board Options Exchange floor there as a member and market maker. So I'm going on 50 years. I was trading before that in college. I made enough money to buy a membership on the CBOE, and then later I was on the Board of Trade for a while, the Chicago Board of Trade, and I was always trying to learn more. So as a result, I love to learn. Hopefully you're a person who loves to learn. If you are, give me a call. If you love to learn and love to earn, I'm here to help you. Let's see, I've studied GAN for all these years. I know Elliott Wave, astrophysics, astrology. I have a background in music, cycles, Fibonacci, technical analysis, and all those disciplines. So looking forward to helping some of the folks there, Larry. I think there might be some of your people.
We did great, Norm. We'll have you on again soon. Thank you. Norm Winsky, folks, Astro-Trends, Naples, Florida. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, getting back to some of the markets, we had Mike Moore as our guest on on Friday, More Analytics, and he was saying how bullish he was on the energy complex. We're going to go into that in just a second, but here's the one from the video this morning. We had this beautiful 382 retracement from the low on Friday right there at 77.37, and it rallied just about $1,500. You can see there's a small 3 drive to a top pattern coming in here right now. I haven't looked at this in quite some time, but we did make a lower low at this level right here by just a tick or two, and we stayed here for a good half an hour. Now, when you look at that, you'll say, well, that might mean much, but it does, because if you look at it, that would make that qualify that as an ABCD leg, because you did go below it. And look at this. This is very little risk. You're talking about maybe $400 or $500, and the risk reward on that is usually pretty good. Now, the one thing I haven't done today is run the AI on this, so I'm going to bring this up to see what it's looking like. We're going to put the problem in and make it work. So hold on, just get up here. There it is. Well, there's what it is. You see here, it was going down instead of going up. That means it was inverted. So all I have to do is to go over and put it in like this, hit the property window and come over and hit invert, because that's just a mirror image of what it's doing from about 2.5 days ago. And there's the actual low, and look what it's doing right now, folks, just heading down. You can't ask for anything. Well, you can ask for something better than that, but it's a little difficult. But that is a beautiful little ABCD right up here at 79.30. It's already down $500 from that point. Let's just look at it real closely here, because we do like ABCDs. There's your A leg right here. There's your B leg, there's your C leg, and there's your D leg. So that's it. Anyway, let's move on here, and we'll be right up here. And okay, yep, let's get this up here. Oh, gosh darn it. One more, and I am going to jump out the window. There's your AB leg right there. There's your CD leg coming in right up there. Now it's backing off a little bit. So that's what we're looking at as we watch these things here unfold, and looking at them quite easily, I guess. Now, we've had a question about the wheat market. As you know, folks, I'm very bullish wheat long term. So it hasn't reached my buy point yet, but I'm being patient on this one. As we come up here and we'll look at this on a daily basis, you'll see we've started to, we had another rally last night. Hold on, along with the corn. That sort of surprised me. Well, we didn't get to our buy price, which was doggone it. See, I want to buy it down here at 34. That's 30 cents away from where it is right now, folks. So I can't do very much at that point. But what I can do, as you can see here, today's action. Let's just get up here on the hourly chart, so you'll be able to see where we are from the last highs. There's our last high back in here. Okay, there we are. There's where we are. Now we come down, we make a slightly lower low here, and then we have a really good rally where we are right now. And where we are right now with wheat, if you go from your high that you made back here on December 31st, on New Year's Eve, you'll see today's high brings you right at the 61% retracement, just like we're setting right here, right now. Now, again, what I'm going to do is I'm going to look at the AI program just to see how well it did. And here again, you can see here was a low coming in, and then, of course, it had a rally, and the last part of the day is not doing very well. So that's still sitting right at the 618 on that hourly chart. And I'm not going short here, even though I probably should, but I'm already short the corn, and that's out 3 cents. So I don't want to start losing money by adding to a losing position, and that's what I don't want to do. Number one thing on my little painting behind the wall here, it says never add to a losing position. And I've done a lot of dumb things in my life, but not for a long time have I done that. But we've got a long time left to go on the wheat, so let's be patient. If you remember, we were also bullish the soybean meal. Let's get to show you what's been doing with that. Now, I didn't have an actual buy signal in this. All I said was it had a pretty good support down there at that 290 level, and you'll be able to see that we've had a pretty good run off of that 290. There was 288. Now we came down, pulled down to the 78% level. Let's just blow this up here. Having a very strong day today. This is a daily chart. So let's go down to the hourly. You see it a little bit better because there was your retracement level right here. There was your 382. So you popped through that pretty good. So we're still on the way up here in the treasury, in the soybean meal. So I'm not involved in this. We had a nice profit in it, got out of it, and never re-entered. So that's what we're paying attention to here with this. You can see the 3-drive pattern here, the ABCD, but that's all past tense. Most of the stuff that we're looking at now, folks, is that we're involved in the gold market, the silver market, and also the crude oil market. And speaking of crude oil, let's take a look. You want to see a wild chart, folks? This has got to take the cake. Hold on just 1 second here. I want to get up here so you'll be able to see it. Hold on here. Here's where we are. This is natural gas, folks. Look at this. This thing gapped up 30, actually more than that. It dropped up $36. It gapped up from the low. Okay, now then what happened was, and I happen to be following this because one of the folks that I trade with or talk to quite a bit is MC over there in Clearwater. You can see here, there was your first pullback right here at the 382 right here. Then you came down and made your ABCD, and then you had another small ABCD. Folks, this is so great because this thing only takes $2,800 margin. This is a $4,000 move on the opening. And then, look, another beautiful ABCD right there, and that one happened to be a Gartley. It took a half an hour, actually an hour to do it, but there's your AB, there's your CD, and there's your 382, well, 0.42, right on the money, and look from there to there, that's $1,600 heading lower. Big moves. This is what you like to see. With volatility like this, and all this stuff working in your favor, you really need to look at natural gas because it's a great thing to trade, and it good fills, good margin to risk ratio. Just think the margin on this is 2,900 with this kind of volume, okay, and swings, okay. That's $1,900. To make $1,900, you have to get a 40-point swing in the S&P. Well, we've got a 40-point swing today, but the margin on that is $25,000, 10 times more. You see why this is a much better deal to do this than you can do 10 of these versus one of the S&P. So that's why it's a very important thing to pay attention to, at least from the way I look at it. So I'm not sure that it's going. By the way, we're almost at the 618 or the 382 now here in the S&P here. Now remember, this was a 786 retracement, so this could be a pretty major bottom in here, but there it is right there. There's your 382 coming in here at 58.65 right here. And the reason why the market is moving so much, folks, is because of the Dow Jones. Here's the Dow Jones. There's about 7 stocks in the Dow Jones that are making this thing move today, and all we're seeing, this is a bear market. All right, let's get it up here. There was our high back on December the 6th. Let's try it again, Larry. January 6th, we had the ABCDs down. We had a big move here today, and now we're having an ABCD correction. So let's look at it together just to see if this stuff really does work. Well, I think it does. The trouble is it doesn't work all the time. So there was our bottom here today. Now you can see we're making an ABC to the upside. So cleaning this out, and we'll be right back, and we'll cover it when we get back. So 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the Dow. Shut the front door and raise our Dow Jones from the high on January 6th. We came down. Today we've had a nice rally of 450 points, almost 500. The 382 on this is 42,516. That's 80 points away from where it is. We could make that easily, and that will also be an ABCD move. Let's just do this the way Gartley would do it. If you took the high back here on January the 6th and put your A leg right here, there's your B, C, D leg, and that would take you right up here to 42,506. And then we will take a look at it from that level and go from there. So anyway, that's what we're watching here in the stock market. Make sure, folks, if you get a chance to try to help folks if you can in California that need help. And so that's what Sarah and I are going to be doing. And boy, those folks have absolutely nothing, and we're going to do what we can to try to help them out. But boy, what a devastation! Every day when I pray, I look at that and I say, oh my God, there but for the grace of God go I, because I don't know how I can handle it. As long as you're still alive, you got a good chance. But boy, losing with everything they've lost and the loss of life, it's just very sad. So keep them in your prayers, no matter what you do. That's very important. I think that we do that. And then tomorrow, our guest will be Stan Harley of the Harley Stock Market Letter. And then also on Wednesday, we're going to have Jeff Huge of Alpha Insights. And hopefully on Friday, we're going to have Jim Bartolioni of Bart's Charts. And that'll be it for the week, but we'll have a lot of fun as we do this. Now, let me check the old clock on the wall here to see if I've got any time to share any information that I have. That's pretty much what I'm doing here. And let's look here. I have 39 seconds. All I want to do is remind you of this one. I don't trade this at all, but boy, Bitcoin looks really bearish to me, folks. That's a head and shoulders pattern. There's your 382 retracement. We're down below the lows of the last several weeks. This is not a good sign. The only change that changes is if it gets it back above here, then I'd say it's still bullish. But right now, it looks pretty bad. So live every day in an attitude of gratitude, and may God bless. And I'll see you on the flip side tomorrow.